Welcome back to the Pro Ticker Podcast, your Thursday morning edition, covering major financial magazine headlines, everyone.
Ready to dive into the latest market movers?
You've sent over a stack of articles from MarketWatch, Bloomberg, and even the Wall Street Journal, so it looks like we're covering a lot of ground today.
Sounds like it.
We've got Apple's new AI-powered iPhone making waves, you have China trade tensions flaring up again, and some analysts are even talking about a potential volatility squeeze in the stock market.
A lot going on, as always.
Plus, we'll unpack what makes a company ripe for a stock split with some real-world examples you might find interesting.
Should be fascinating.
Exactly. Think of this as your shortcut to being in the know without having to wade through all those articles yourself.
Love that.
So let's jump right in. First up, Apple's making a big splash with the new iPhone 16e.
It's certainly grabbing headlines.
Right, it's being touted as a lower-priced model, but it's still packing some serious AI punch creatures that were previously exclusive to their more expensive phones.
That's a key detail. By bringing AI features to a lower price point, Apple is signaling that they see AI as a core part of the iPhone experience, not just a luxury add-on.
Okay, but here's the thing. It starts at $599, which is a bit steeper than some analysts were predicting. Some folks thought it would be closer to $500.
Yeah, Apple's pricing strategy is always fascinating.
It is?
They're clearly confident in the value proposition of this model, even at a slightly higher price point. The article quotes Wedbush Securities analyst Dan Ives, who calls it smart pricing. He believes it'll boost sales in international markets, especially those where affordability is key. Plus, it might entice users with older iPhones to finally take the plunge and upgrade.
Yeah, I could see that. That upgrade cycle is a powerful force, especially when you dangle shiny new AI features in front of people.
Exactly. And speaking of those AI features, the article highlights how the iPhone 16e is being marketed as built for Apple Intelligence. That's their branding for the suite of AI features they're rolling out and includes, get this, OpenAI's ChatGPT integrated right into the phone.
Whoa, that's a game changer. Having ChatGPT at your fingertips directly on the phone could completely transform how people interact with their devices.
Imagine the possibilities, from drafting emails and brainstorming ideas to getting real-time information and translating languages. It's like having a personal AI assistant right in your pocket. Analyst Dipanjan Chatterjee from Forrester Research even suggests it could significantly lower the barrier for entry for older iPhone users who might have been hesitant to embrace Apple's AI offerings before.
That's a great point. Accessibility is crucial for mass adoption of any technology, especially something as transformative as AI.
Absolutely. And if Apple's strategy proves successful, it could put pressure on their competitors to step up their AI game, leading to a much faster rollout of AI features across the entire smartphone industry. It's a potential ripple effect we'll be watching closely.
Definitely. All right, let's shift gears now to something a bit more geopolitical: U.S.-China relations. Things seem to be heating up again, according to Bloomberg. Apparently, China is not happy with the U.S. State Department's updated fact sheet on the nation.
Oh yeah, this fact sheet is significant because it reflects the U.S. government's current stance on China. The Bloomberg article highlights some key changes that signal a shift towards a more adversarial approach.
Yeah, the language now explicitly focuses on countering China's technological ambitions and economic influence. They even dropped an entire section on U.S. assistance to China, which speaks volumes about the changing dynamics between the two countries. Is a far cry from the cooperative spirit we saw a few years ago.
Right. And the Bloomberg article also points out a related development. The U.S. State Department updated its fact sheet on Taiwan on the same day, removing a line about not supporting Taiwanese independence. It's all part of a broader trend of increasing friction between the two superpowers.
Definitely a lot of tension brewing there. It'll be interesting to see how this impacts everything from trade and technology to global security in the long run. It's a complex and delicate situation.
It really is. Speaking of complex situations, let's move on to X, formerly known as Twitter. The Wall Street Journal has an exclusive on their CEO, Linda Yaccarino, and her aggressive push to get ad agencies to increase their spending on the platform.
It sounds like she's pulling out all the stops to get X back on track financially after the turbulence of the Elon Musk takeover.
That's right. The Wall Street Journal article details some of the tactics X has allegedly employed, including hinting at potential legal repercussions for advertisers who significantly reduced their spending after Musk took the helm. There's even a suggestion of leveraging political pressure to persuade advertisers to return.
Wow, that's a bold strategy. I wonder if it'll pay off in the long run and backfire spectacularly.
It's a gamble for sure. On the one hand, X needs to generate revenue and advertisers their lifeblood. But on the other hand, using these kinds of tactics could alienate advertisers and damage their reputation even further.
It's a delicate balancing act. And this all ties back to that ongoing antitrust lawsuit X has going against the World Federation of Advertisers and some major brands like Mars and CVS Health for allegedly boycotting the platform after Musk's takeover.
Right. It's a tangled web of legal and financial maneuverings, and it's playing out against the backdrop of a social media landscape that's in constant flux.
Yeah, it'll be interesting to see how it all shakes out. It's a high-stakes game for everyone involved.
Absolutely. But on a more positive note, the Wall Street Journal article does mention that some big brands like Amazon, Apple, and Verizon have actually started spending money on X again.
Well, that's a glimmer of hope for X. Perhaps they're starting to win back some trust. Or maybe those brands simply want to avoid any further legal or political headaches. Either way, it's a step in the right direction for them.
For sure.
All right, let's turn our attention now to the economic landscape. What's the latest from the Federal Reserve?
Bloomberg has a couple articles on the recent Fed minutes, and it seems like officials are taking a wait-and-see approach when it comes to interest rates. They're holding off on any adjustments for now until they get a clearer picture of how inflation is trending.
So a cautious approach from the Fed, which makes sense given all the uncertainty in the air.
Exactly. And speaking of uncertainty, Bloomberg also notes that some Fed officials are expressing concern about potential risks stemming from President Trump's economic policies, particularly his use of tariffs and his immigration crackdowns.
Those are definitely factors that could have a significant impact on inflation, the labor market, and overall economic growth.
Absolutely. The Fed is in a tricky position right now, trying to navigate a complex economic landscape with a lot of moving parts.
Yeah, I imagine those meetings must be quite tense these days. Oh, there's a quote in one of the Bloomberg articles from Fed Vice Chair Philip Jefferson that stood out to me. He said, "With a strong economy and a solid labor market, we can afford to be patient and take our time to assess the incoming data before making any further adjustments to our policy rate."
That suggests a relatively optimistic outlook, at least for the short term. They're acknowledging the strength of the economy, but also recognizing the need to proceed with caution given the potential risks on the horizon.
It's a balancing act, for sure.
It always is.
All right, it's a good place to pause for now. We'll be back in a moment to continue our deep dive into the financial news that matters most to you. Okay, let's pick back up with something that's been making headlines, the price of gold.
Yes, CNBC and MarketWatch are both reporting that gold is trading at record highs.
It's fascinating, isn't it? Gold has always been seen as this safe haven asset, and it seems like investors are flocking to it now amidst all the uncertainty we've been talking about.
Makes sense. When geopolitical tensions rise or economic storms are brewing, gold often shines as a safe bet. It's a tangible asset with a long history of holding its value, especially during turbulent times.
And it's not just individual investors, right? The World Gold Council reported that global gold demand hit a record high last year, and that includes strong demand from central banks around the world.
That's right. Central banks are diversifying their reserves, and gold is a key part of that strategy. They're looking for assets that can weather economic storms and currency fluctuations.
So it's a combination of factors driving this gold rally: geopolitical volatility, economic uncertainty, central bank demand, and even, as some analysts suggest, a bit of a fear of missing out mentality among investors who see gold prices soaring and don't want to be left behind.
Exactly. There's a sense that gold is a reliable store of value in uncertain times.
But is there an actual shortage of gold?
Not really. There's plenty of gold in the world, but there is a perception of scarcity that's contributing to these price surges. For example, there have been reports of large shipments of gold being moved into the U.S., potentially to avoid future tariffs. That kind of activity can create a perceived shortage in other markets and drive up prices.
Interesting. It's almost like a self-fulfilling prophecy. The fear of tariffs and trade wars is actually creating the conditions for higher gold prices.
Precisely. And that leads us to another interesting topic that caught your eye in MarketWatch: stock splits.
Yes, this article makes a fascinating point. Stock splits often lead to outperformance in the market, even though they don't fundamentally change a company's value. It's like a magic trick, isn't it?
It's more about psychology than magic tricks. Stock splits can make shares seem more affordable and accessible to retail investors, which can generate excitement and momentum, driving up demand and, in turn, the price.
It's like suddenly everyone wants a piece of the pie because it seems easier to grab a slice.
Exactly. The article highlights some examples of companies that have done stock splits recently: Goldman Sachs, Meta, BlackRock, Netflix, and these are all companies with strong growth potential and relatively high stock prices.
So does this mean that every time a company announces a stock split, investors should rush to buy shares?
Not necessarily. It's important to remember that a stock split is essentially a cosmetic change. It doesn't alter the fundamentals of the company. You still need to do your research, analyze their earnings, revenue, market share, and overall prospects before making any investment decisions.
Right. Don't get caught up in the hype. Focus on the underlying value of the company.
Wise words. Now, let's shift gears again. Bloomberg has a report on Qatar issuing dollar bonds.
Interesting. And they're doing this even though they're projecting a budget deficit this year?
That's right, but Qatar has a strong credit rating and a reputation for financial stability, so investors are still confident in their ability to repay their debts. That allows them to borrow at favorable rates despite the deficit.
So what's contributing to this budget deficit?
Well, falling oil and gas prices are a major factor. They're a major exporter of those resources, so lower prices mean less revenue for the government.
But they're still sitting on those massive natural gas reserves, right?
Exactly. And they have plans to increase production in the coming years, so their long-term fiscal outlook is still quite strong.
Okay, good to know. Now for our final headline, let's talk about Microsoft. They're making waves in the world of quantum computing, according to MarketWatch.
They've announced a breakthrough with a new quantum computing chip they've developed.
This is exciting stuff, isn't it? Quantum computing has the potential to revolutionize so many industries from medicine and materials science to artificial intelligence.
Absolutely. The implications are far-reaching.
The MarketWatch article quotes Microsoft CEO Satya Nadella, who's very optimistic about the future of AI. He believes it has the power to drive economic growth and productivity, not just within the tech sector, but across all industries.
He's not alone in that belief. There's a growing consensus that AI is a transformative technology with the potential to reshape our world in profound ways.
Definitely a space to watch closely in the coming years. All right, before we wrap up our deep dive for today, let's circle back to something we touched on earlier, volatility in the market.
Yes, that Bloomberg article about traders using VIX call options to hedge against potential swings in the stock market.
Can you remind us what VIX call options are and why traders are using them?
Essentially, VIX call options are bets that market volatility, as measured by the VIX index, will increase. Traders use them as a way to hedge against potential losses in their portfolios if the market takes a downturn.
So it's a sign that despite the S&P 500 cutting record highs, there's a growing sense of anxiety among investors, and they're looking for ways to protect themselves if things start to go soft.
That's right. And the interesting thing is that this hedging activity itself could actually contribute to increased volatility if the market does start to swing wildly.
It's a bit of a paradox, isn't it? Trying to protect yourself from volatility could end up fueling more volatility.
It's a reminder that markets are complex systems with interconnected parts, and sometimes even the most well-intentioned actions can have unintended consequences.
Definitely a lot to consider as we navigate this ever-changing financial landscape. So much to think about, right?
There really is.
From Apple's AI-powered iPhone
Yeah.
and those trade tensions between the U.S. and China to why gold is surging and whether stock splits are really all they're cracked up to be.
For sure. It's been a fascinating deep dive.
And hopefully you're feeling a little more in the know now than you did before we started.
Absolutely.
We've touched on some major trends shaping the financial world.
Like the rise of AI?
Exactly, and the constant push and pull between global powers and the never-ending quest for safe haven assets.
Plus that underlying current of volatility that always seems to be lurking just beneath the surface.
Right.
It's a complex and interconnected world out there, and staying informed is crucial.
I totally agree. So as you head into the rest of your day, think about what really stood out to you from our deep dive. What sparked your curiosity? What new insights will you carry with you?
Maybe you're thinking more about the potential of AI and how it could revolutionize industries. Or maybe you're pondering the future of U.S.-China relations and what it means for global markets.
Or perhaps you're even reconsidering your own investment strategy, given everything we've discussed.
Whatever it is, keep exploring, keep learning, and keep asking questions.
A financial world never stands still, right? So the more informed you are, the better equipped you'll be to navigate whatever comes next.
Couldn't agree more.
Thanks for joining us for this deep dive into the financial news that matters. We'll see you all tomorrow morning with new headlines from major financial magazines.